Hey everyone, welcome back to Corporate Decoder. Today we are diving into integrated ventures, and let's just say their latest filing is a bit like a roller coaster you thought was safe. It has some unexpected dips, turns, and moments where you wonder if you should have stayed in line, captured dips, turns, and moments where you wonder if you should have stayed in line. But before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we chat about companies and reports. This is Integrated Ventures Quarterly Report, or Form 10Q, for the period ending March 31, 2025. It is essentially a snapshot of their performance over the last 3 months, giving investors and the public a peek under the hood. Let's see what it reveals. As of May 16, 2025, they had a little over 6 million shares of common stock outstanding. This number is important because it is what all per share calculations are based on. It impacts how much each share is worth and what portion of the profits you get. Let's jump into the financial statements. First, the balance sheets. This is a summary of what the company owns, assets, what it owes, liabilities, and the value of the company as a whole, equity. The company's cash position increased substantially, jumping from around $57,000 in June of 24 to $482,000 by March 2025. That's a big jump, suggesting they've been able to bring in more money, maybe by cost cutting or some new cash generation initiatives. And in this case, it came from selling assets. Their digital assets took a huge hit, going from $127 million to $6, most likely fixed $6. This means that they sold off much of their digital assets, most likely Bitcoin, to get that cash boost we saw earlier. While a company can sell assets to raise cash, it is also a sign that their core operations might not be making enough money, forcing it to sell key assets. The company's accrued preferred stock dividends remain high at $2.1 million. It's worth noting that while this appears to be unchanged between June 2024 and March 2025, according to the notes in the financial reports, both owners of Series C and D preferred stocks agreed to stop accruing dividends in February. This means that there may be issues with cash flow and repaying debts. Moving on to the statements of operations, this is where we see how well the company performed in terms of making money over the last 3 and 9 months. Total revenue for the 3 months ending March 31, 2025 was about $281,000, a significant drop from the $1.9 million, a similar story, about $425,000, compared to $4.7 million. They brought in $7 million the previous year. That's a major reduction in income, over 90%, so the company is having trouble selling their products, I see. The lack of digital asset mining also contributed to the losses and highlights the importance of the new health and wellness business lines. The company had big savings in expenses, and its cost of revenues went down to 0 compared to over $1 million the previous year. General and administrative expenses are up, however. The net loss was about $635,000 for the quarter, compared to a profit of $297,000 the previous year. Looking at the 9-month picture, the loss is $2.626 million, while the previous year it was $9.1 million. Let's quickly review the statement of cash flows. The net increase in cash over the 9 months was about $424,000, compared to a net increase of only $123,000 in the previous year. Despite the losses, they are managing to keep their cash reserves afloat, mostly by selling digital assets and other assets. Of note is the large cash injection of around $8 million from the sale of digital assets, although that comes at the cost of having no Bitcoin on hand. Now, let's take a quick look at the accounting policies. These are the rules and methods the company uses to record and report their finances. It's important to be aware of these because they can greatly affect how the numbers look. It's worth noting that since July of 2023, the company early adopted a new accounting standard that values digital assets at fair value, a mark-to-market basis, meaning that if Bitcoin does well, it will help them a lot, while if it drops, their financials will suffer accordingly. Important items in these policies are the use of estimates, significant influence, revenue recognition, and fair value of financial instruments. These require the company to have a good understanding of how external parties value the company, including all its assets, and how they are accounting for future services revenue. There were no current legal issues according to the report. This is a huge red flag. The report indicates that there is substantial doubt about the company's ability to continue as a going concern. A going concern is the expectation that a business will continue to operate for the foreseeable future. When a company is no longer a going concern, that means bankruptcy is near. This is due to recurring losses and current liabilities exceeding current assets. Basically, the company owes more money than it has available to pay its debts. Finally, there's a statement that the company is not involved in any current litigation. The report mentions problems with disclosure controls and procedures. That means the processes they have in place to make sure all the information in these reports is accurate and timely may have weaknesses. The board of directors is very important to these procedures, and it's currently without any independent members, and no financial expert is present within the company to oversee the work and the reports. Both problems that management is going to look into. Management is aware of the weaknesses and has plans for corrective actions, but this is a serious thing to note. The CEO and CFO are signing off with certifications, which means they believe everything presented in the report is fairly stated. So what does this all mean? Integrated Ventures is facing a tough situation. Their revenue is way down, and the core mining operation has been stopped. The shift into health and wellness is promising, but still very new. They are managing cash but have huge going concern doubts. The company is trying to shift direction, but if the past debts are not dealt with, there might not be a future. It all comes down to execution. Can they successfully pivot to these new markets, get back into mining, and fix their internal controls? Only time will tell. The next few quarters are crucial for Integrated Ventures. Alright, that's our breakdown of Integrated Ventures' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.